Hey, what's happening, folks? Welcome to the video. In today's video, we're going to review a trade from today. Today was October 2nd, 2020, and I took a trade in my live account. It was an interesting little trade, and there was a lot of things that kind of happened in this trade and things I was exposed to. I was exposed to some challenging decisions that I had to make, and I'm not sure if I made the right ones. All right, guys, so before we get to the video, I got to tell you guys to subscribe to the channel, leave a comment, smash the like button, and let's get to the video. All right, so what you're looking at is a recording on my screen from today. This was the NASDAQ market. All right, we were pulling back from those 440s. The calls were hot this morning. All right, there was a lot of open interest on the long side of the market, and I was looking to buy into this pullback right here around this 410 to 400 range, and this is where I was looking to scale into a long trade for a potential rotation back up to about this 430, potentially even 450 area. All right, so we're going to see what happened here. So you're going to see me starting to scale into some of these calls right here. All right, so there you go. I got filled on the first part of my position there. Average price 113 on those 279 calls on the triple Qs. I'm not going to go into the complicated mechanisms I use to manage my risk and calculate the movement of the option based on the futures contract price, but I will explain to you the various amount of things that I had to go through in this trade and why it was sort of complicated. And it's going to be interesting. It might be a learning experience for you too. What ends up happening is the market sort of consolidates here, and then we see another leg down. So this another leg down, I was looking to add more because I wasn't done scaling in. I would have been happy if I nailed that entry, but if we traded lower, I would have scaled in a little more, which I did. So I scaled in another contract right around here. I get filled at 94. And again, I'm looking to lean on these prices down here around VWAP down to about 370. Market trades all the way down to 370. I'm definitely going to be wrong on this trade. So that's pretty much what I was looking to lean on. Catch a little bid off of this low. So this sort of ladder, this ladder here on the left is the ladder for the option that I was trading. So my average price would have been around 108, 107. And I'm looking to dump these things on a rally up to these 430s, okay? And what happens at this point, now there's something kind of complicated that happened to me here. The market sort of pulls back. We see a little bit of a shakeout. Nothing wrong with that, no red flags. And when we finally see a shakeout down to about 395, that's when the market started to rally again. We see a second leg up, the thing rallies to 425. This is when it got interesting. So at this point, it was not hitting the target I set in place for myself on this trade. Now, this is why it's so dangerous to use profit targets, guys, because when you have a profit target in mind, a lot of the time what you're doing is you're creating an arbitrary price that you want to take profit at. All right, and in the case that your price doesn't get hit, what ends up happening is that you stick with it because that's still your target that you created for yourself. So this is a common error for new traders and maybe experienced traders too. So what ends up happening is I became so fixated on the market trading up to this 430 again, because 433 was a very key important price. The option was being offered at 120 here, 121 you can see, and it traded here for about maybe 4 or 5 minutes, and it just couldn't trade higher. All right, it was stuck around this 426 area, and my average price is around 108, and I am not protecting the trade at this point because again, I'm leaning on the lower prices, but at the same time, am I really willing to stay in this trade if we start trading lower from here? Am I really willing? That's a question I don't think I asked myself in this trade. So I'm in profit in this trade right now by about $12 a contract, and I'm not sitting here taking profit on them. Instead, I'm waiting for my price to get hit. I'm not sitting here protecting the trade. Instead, I'm fixated on the price that I wanted to get. All right, I had a limit sell in around 130 because my calculation was when the market trades at about 432 to 435, these things are going to be trading around 130, 131. Short story long, the market doesn't get there. We sell off a bit, then we rally back, and then we sell off big. All right, so now at this point, I'm red on the trade. Okay, so first mistake was that I didn't lock in a break even there. Again, now that's subjective, right? Because some traders will say, all right, you can kind of hang on to it. You can give it a shot. It's not a big deal. Again, it's just a shakeout. If you're leaning on the lows from the earlier part of the session, you can't see the prices here, but it was around 370, then probably you're going to stick around the trade. There's no reason you should cut it on this dump right here. And again, there's a high probability that unless we just dump like crazy, that I'm going to probably be able to get out of this trade for a profit or a break even. Market rallies, and it gives me a chance to get out break even. Did I get out break even? No, because I was still fixated on that profit target. All right, I'm not going to sit around in a big pullback like this only to be getting a break even, because the gambler in me will not be satisfied with that. I need a reward to make up for this pain I just had to sit through in this pullback. That is a pure gambler's fallacy. So that was the first chance I had to get out break even. Didn't take it. Market sells off, almost stopped me out that time. But again, the stop was around 370. And what happened was we bounced drastically off that VWAP, and again that kept me in the trade. Here we go another time. The market's bouncing and the contracts, again, they're slowly decaying because these are same day expiry calls, don't forget. We start to chop and the market rallies. There's another chance that the market gave me to get out break even, so that's a second chance. Now I didn't take it. Two chances, didn't take it. Now the market's kind of chopping. We're starting to see a bit of an offer come in around this 405 to 410, and it's having trouble lifting. So we see a pullback and it gets bought up quickly. We see another pop up, so you can see that the offer is 105. It's pushing and it's trading. It's trading at 105. You can clearly see that. So that's close to my break even. Break even's 108. And again, offer is not lifting at that point. And then sooner or later, it trades back down. All right, so that would have been the third chance I had to get out by pretty much a close break even. And again, I was so fixated on this price continuing up that I could not take a break even. I just couldn't do it. So long story short, market sells off and I get stopped out. It would have hit me out of the trade right here. So my conditional order was set to sell the position if NASDAQ trades at 377 or 376. I wasn't exactly sure. And there we go. We trade the lows and you're going to see my position get sold.
Order partially.
There we go. 59 cents a contract. So I took a nice loss on
Order
that
canceled.
trade after the market gave me 3 chances practically to get out for a nice break even. The positive side to this story is that from this moment on, the market literally fell off a cliff. So I did in fact place my stop in a place that if we would crack that level, I would pretty much be 90% wrong on that trade. And that is what happened. The market fell off a cliff from that point. But what I failed to do was to manage the trade earlier. On those first 2 chances I had to get out break even, I was not interested in getting out break even. That's a problem. That's a big problem. Gambler's fallacy is that when you sit through pain, you're not going to be content to take a break even after sitting through pain. All right, well, I think in this video, guys, I've covered some aspects of trade management, and I just showed you some of the important choices that traders are often faced with when it comes to managing positions. Before I end the video, I want to say trading, guys, is like a game of hot potato, and trading options on their expiry day is like a game where there's a really hot potato, and if you get stuck holding it, you're going to get burned really bad. But the thing is that if you hold it long enough and then sell it at the right moment, there's a chance that you can get some massive profits. But the thing is that if you hold the potato too long, you end up in a position where you're holding onto a hot potato. It's slowly burning you away, but you can't necessarily feel it yet because the options decay so fast. And in that case, where you're holding an out of the money option and you don't know if it's going to hit your profit target like you think it is, you should probably cut a break even. So guys, this is a learning experience for me, that when I take a trade like this, and if I end up offside, and if the market gives me a chance to get out break even, I need to take it. Please, I need to take it. I need to take the break even. 1 chance, 2 chances, and a 3rd chance break even. I didn't take it. You're a pure gambler. There's no other way to put it. Alright guys, if you learned something from this video, which I hope you did, leave a comment, subscribe to the channel. See you in the next video. Take care, bye.